Here we have the daily price chart for CHEWY Incorporated, stock ticker CHWY. As we can see here, we have started to form a bit of a base at an important Fibonacci zone. Um, Long term, this stock is starting to turn into a bit of a meme stock. Um, it does seem that this has led to some volatile and unpredictable trading activity recently. But it is starting to look as though we've started to stabilize here, and it might be a better time for newer traders that do not yet have long positions in this stock. If you're currently long, you've been on a bit of a roller coaster here. If you were holding the position during the time period that spanned the June 27 trading session. Ultimately, this trading period saw highs of 39.10 and lows of 27.15. This occurred, in a very short period of time. It was far less than the full trading session. It was just a matter of 1 or 2 hours. It was a very short period of time, and this was a major whipsaw activity that probably stopped out a lot of traders in the process. Those are volatile trading conditions. I do not generally recommend that people enter into those types of trading positions. I think it's very dangerous, and I think it's very easy to lose money, even in cases where you're right about the trade. I know that sounds strange, but it's very possible to get stopped out in a situation like that, and then to see prices quickly reverse back in the other direction. That's one of the worst things that you can do as a trader. You do not want to do something like that. It's the dumbest way to lose money. It really is. The best thing that you can do to avoid those types of situations is to simply not trade when things are becoming more volatile and unpredictable. This would have been a situation that would have occurred toward the end of the June month. Fortunately, it does look like we're starting to stabilize here. I understand that a lot of people are interested in this stock longer term. The outlook does remain very positive, and the potential for long-term gains here is quite substantial. If we just kind of pull out on the chart here a bit, we can see that the stock was trading at significantly higher levels here a relatively short period of time ago. We can go back to February 2021 with the stock trading, right around $120 per share. And currently we're trading below 30. So, these are substantial price moves that have occurred in relatively short periods of time. And it does suggest that the potential for upside far outweighs the potential for downside. So overall, that's a positive framework, and that is the type of thing you want to see. But you just want to do it at the right time. If we're entering into meme stock status here with this ticker, it can make things unpredictable and unfavorable. And you need to really wait until the dust settles before you step in. Fortunately, it looks like we might be at that point now. The reason that I say this is because if we look at this major price move here, we can kind of draw the lows coming from this would be the April 25th low of 1469, and then going back to, as I said, that June 27th high, which came in at it's 39.10. So if we're looking at this price move as the most dominant recent price move, we can see here that share prices have really started to stabilize at the 618 retracement. That's significant because in my opinion, that's the most important Fibonacci retracement level, and it just so happened to catch prices almost exactly, as we can see here. That's sort of this white line here, this maybe green zone here. We can see the prices kind of rally hard and then sort of fall back and correct themselves. And then they start to stabilize right around here. So since we're looking at the daily chart here, this yellow line here represents the 20-day exponential moving average. We have fallen a bit below here, but we're roughly trading in line here. I wouldn't really consider this to be a significant break to the downside. This was a very volatile trading period, so it's not entirely unheard of, to see slight breaks here as prices are trying to stabilize. I do feel that this 20 period exponential moving average is still likely to work as a decent support zone. And then in addition to that, we have the 618 retracement and the fact that this price level here was an old resistance level, which would now be expected to work as support. So if we go back to the June 6th trading session, we can see that highs are posted just above $24 per share. 2401. And here on this chart, the 618 retracement comes in at 2391. So we're talking about a 10-cent difference here, which for all intents and purposes is the same, roughly the same level. It means that we can use this price level as a basis for trading activity. So, overall, what I'm seeing here is encouraging. I do think that we have started to stabilize here. I think that the meme stock community has, had its fun here, and is, I think that things are starting to kind of return to normal, and this sort of allows a better positioning entry for new long positions. So currently, I wouldn't say it's too late. I mean, the question here might be, is it too late to buy? The ultimate support level here really is, should be looking at it as roughly $24. So you would be buying about $2.50 off of the low. Not terrible. You had roughly 250 in downside, and then the following support level from there would be coming in at 2173. So these are kind of the levels to the downside. Like if you were to enter into this position currently, these are kind of the two levels that I would be watching to sort of backstop the position, to kind of base the position as a support zone. So going forward, to the top side here, I don't want to just state the obvious, but we would have to start to look at a full retracement back to the top side here. The spike high came in at 39.10. In my opinion, this is a bit of a rough estimation that was made by the market on a very short term basis. I think that the true level here comes in a bit higher. We can go back to the June 16, 2023 highs, which posted at $40.78. So 39.10 is significant because we did see a price failure here. So if we did see it again in the future, wouldn't be totally surprising if you did see prices start to reverse there. Maybe it's time to exit the position and take some gains if you're there. But in my view, the real level here to watch is about $1 higher. I would say a break of this $40 level would be the true upside target. I don't really put much stock in this. These spike highs that kind of happen over a 1 or 2 hour trading period. I mean, this was crazy activity, and this is just the meme stock world, having its fun, getting into the game, and influencing prices in both directions. But that's a dangerous environment to be in. You don't want to be playing in that sandbox. Now that the dust has settled here, it is a better idea to start to consider long positions rather than before. So, you've got, I wouldn't say it's too late here. You're not exactly trading at the lows, but, you're relatively close to this $24 mark to the downside. And then from there, you should be watching for additional support to come in at roughly 2180, 2170, 2180 as a way of containing your losses to the downside. So this would be the current market analysis for CHEWY Incorporated, stock ticker CHWY.